Mind you, taking a look at the share market at least, we saw those stellar gains, particularly towards the end of last year. Maybe investors just taking their foot off at the moment, contemplating what's next.
Yeah, absolutely. I'll tell you what, that fear of missing out, that 2-month rally was just stellar. And nearly every market except China had a really nice rally to the upside and very, very strong finish to the year, as you said. Also, from a tax position in the US, they weren't going to sell because they'd have to pay capital gains by April. So, any selling you probably saw in the first part of last week or, earlier in the week. And then in turn, how it all sits as far as Fed policy, Andrew, and naturally expectation of a rate cut by March seems to be evaporating a little bit, both with the ECB and the Fed.
Well, let's just take a look at that daily performance, see how we finished last week, those winners and losers. And you see crude there. In fact, a lot of this in regards to that ongoing conflict in the Middle East, Pete.
Absolutely. The Houthi rebels and naturally the Gulf of Aden leading into the Red Sea and up to the Suez. And if that was to really, gain more traction, Andrew, then that would really disrupt the shipping industry tremendously. And as all goods are shipped, then that would really put a powder keg under inflation. So let's just see how that all rolls and keep a close eye on crude because it's very choppy and very volatile.
All right, so I was mentioning what's going on with equities at the moment, Pete, and of course we had some further macro data out of the States as well with those non-farm payrolls, certainly surprising on the upside, whereas the ISM that read was disappointed. So how did equity investors react?
Well, I tell you, first off, we were expecting about a 166,000 for non-farm, and it shot to the, as you said, shot to the upside at 216. So it really hit everyone by surprise. If you're looking at the close, Andrew, it was a fairly mixed sort of night, but it did end in positive territory, only up just a touch as far as US equities across those three markets, the Dow, the S&P and NASDAQ. So that was, at least it finished in the positive. And as far as the ISM, well, that's certainly a concern from a contraction standpoint. So keep a very, close eye on, February and March as far as how the US is trading and production and, manufacturing is a key component as far as economic growth.
So, Peter, when you look at this chart of the S&P 500, what are you looking for now? Where are we at just as far as those levels are concerned?
Well, Andrew, I mean, everyone had their eye on 5,000. That was probably over bullish, but it's sitting at 4750 sort of number, a little bit higher. Then it's probably got the potential to hit that 5,000 sometime this month. It's hard to argue against a bull market with that really strong uptick. So don't stand in the way of momentum. And still, I think that there's a high degree of traders, that fear of missing out, they're piling in, and so that seems to be the course of events at the moment. Maybe we do see a little bit of a softening and maybe some profit taking, but until you get something concrete out of the Fed or something to disrupt the markets, then I suppose it's onward and upward.
Yeah, of course, traders, investors, all looking towards rate cuts this year. Now, of course, this depends on that data we're getting out of the States at the moment. I guess this week or two, we're getting a read on inflation.
Yes, exactly. Well, that's right, later in the week. And, there was Andrew, it was 100% baked in as far as expectation from investors, certainly not from the Fed, but from the investor standpoint, everyone said, well, it's going to be March, it's going to be 160 basis points. Well, that's since evaporated down to about 140, and that 100% is probably now in the high 60s as far as a probability. So they've really pulled that back from an expectation standpoint. And so is March going to be lift off? Is it going to be April? Is it, we've just, again, wait and see how everything materialises. And if any concern is, first off, you saw that lift off as far as ECB, and you saw higher than expected inflation across the Eurozone.
How's this panning out for, well, we saw those treasury yields did move higher. What about the US dollar? Because certainly in the past few weeks it has shown weakness. Is that now perhaps going the opposite direction now?
Well, it's at 102.44. It's bounced. It's been choppy, and there was a chance that you could have seen a 103. Though, again, it's just, it's choppy, Andrew. That seems to be the state of events as far as the US dollar. It's pretty much range bound between that 102 and 103 handle, where it runs this week, I wouldn't be surprised, possibly a little bit of softness. But again, you're dependent upon numbers being released to market. It's traditionally thin trading this time of year. And I'm sure the currency traders are looking at it closely because there's plenty of opportunity across some of those cross rates that have, been an incredible start to the year. Have a look at the Aussie, have a look at, Japanese yen. They've all shown quite extensive good breakouts as far as movement.
You mentioned the Japanese yen then. What are we seeing in Japan at the moment? Of course, speculation that the Bank of Japan is actually going to make a move sometime this year.
Well, exactly. We've got yen traders. You've got wages in the expectation this week, Tokyo CPIs, and the Bank of Japan's exit hints where it all rolls. So I would say, Andrew, you will get some action from the BOJ. When is that's the question to ask. So is it going to be in the first quarter? Is it going to be second quarter? We've just got to see. But the yen has been, again, a wonderful market to trade. The Nikkei's been strong all year, and all 23, that is. And, that yen sitting at around about 144.60 at the moment, possibly a little bit further upside for that against the dollar in the short term.
Elsewhere, Pete, what are you seeing in the UK at the moment? Perhaps signs that recession is upon them. What are you expecting there?
Well, London's very nice this time of year, Andrew. It's lovely across Waterloo Bridge and walking down to all of the sites, but unfortunately, it's fairly bleak from an economic standpoint. So, yeah, we're worrying about the numbers coming out this week, monthly GDP. And how that's going to play into the market. So I think it's going to be a really tough first quarter for the POMs. And we've just got to see, again, how that impacts as far as pound. It's currently sitting at around about 1.2720. And are you going to see further breakouts there against the pound versus dollar? And, that chart shows pound against yen.
Yeah, so what are you expecting then from the Bank of England?
Gee, I tell you what, it's going to be a hard one for them, Andrew. Maybe you're going to see some move to the downside, or it just depends on. I'm sitting on the fence on that one because it's so hard to call, because we're worrying about naturally recession fears, and you're looking as far as economic growth on the, moving out for the next 3 to 6 months. It could be very, very tough. So are they going to be taking some sort of heat off the table, or are they just going to sit on their hands? And I'm probably erring on the side they'll probably sit on their hands. And
across the channel, what are the expectations, particularly from the ECB in regards to where growth is going, and obviously inflation, that's looking a little more positive?
Well, yeah, but they had, in the inflation hit an 8-month high at 2.9%, up from 2.4% from the month earlier. So that's really hit ECB, and their thoughts are fairly tough. And the expectation there is naturally for a rate cut, but that's been, taken some of the heat off that from about a 66, 67% probability down below 50 now, all in the last couple of days. So this is how the impact is having to the market. That'll have an impact naturally to the euro. And this could be the course of events as far as if US was to fall into a similar frame this week. So it's a very dynamic market, all of the interest rates and naturally currencies.
Peter, let's turn back to commodities with oil in focus. We began, given that outperformance we saw late last week, to where are you seeing the oil price go from here?
Well, Andrew, it all depends naturally on geopolitical concerns, and Saudis have just cut about $1.52 off their Asian supply. So that's been a good news event across all of Asia. But the other side, of course, is if geopolitical was to ramp up from here, then crude would really take a big push to the upside from war premiums and everything else built into it. So we've just got to wait and see if there's going to be anything that sits on the outside that moves to the inside, which impacts price quickly. Anything other than that, I'm just taking very much a day-by-day look at crude, and it just seems to be very tightly traded. But like it is, it's a very volatile market that anything can happen at short notice.
Pete, let's round it out with crypto. Of course, reflecting that risk on from investors late last year, certainly in the second half. Yeah. What are you watching for when you take a look at that chart for Bitcoin?
Well, I tell you what, it's up, 21-month highs. We all see there. The chart tells the story, Andrew, and you went from, this time last year at 50, I think it was about 16,000 all the way through to nearly 44, 45 something. Who can argue with it? I mean, it's just been tremendous growth to the upside and just seems to be onward and upward. Everyone's got their eye as far as what's going on in the States with ETFs of it and, and spot markets and so on and so on. But I think overall, it's hard to argue against the crypto market at the moment, and many traders are piling in and they continue to, trade 7 days a week, and it seems to have a big attraction naturally from trading, but certainly from volatility. And I think probably the best days are ahead of it, not behind it.
Pete, that's a great roundup of the global perspective. Let's just finish with your expectations for the year ahead, perhaps the local equity market. The local index, I think it's around 2% off its highs that we saw, back in 2021. What are you going to be looking for that's going to drive momentum there, perhaps?
Well, I think we've got to look at growth from China, Andrew. We've got to see what's going on as far as Asian growth and naturally the health of the global economy and how the US trades over the first couple of quarters. We've got an election year naturally in November. So all of those moving parts need to be considered to take the Aussie higher. Maybe it's got an 8,000 in front of it. I'd like to think so by year end, maybe even higher. But where it's dependent naturally on what's going on with interest rate policies, inflation, GDP, and a host of other economic events that can really, I think, either take us higher or stay or even push us down from here. So that's not really an answer, but all it's saying is that we're connected globally and you can't take your eye off the global ball.